Well,
we are coming to the end of this money and banking conference, extraordinary conference indeed. We are very happy for all the people who have got involved in organizing them and participating as well. Last December, we started with the stabilization program and public policies and central bank regaining its character, institutional one. We had a lot of international commitments, and the central bank had a domestic agenda, institutional agenda, very challenging indeed, money and banking conference, and we tried to find a solution to the hyperinflation phenomenon we were suffering. And we had to decide whether to go forward or not. We noticed that the world was very interested in Argentina with the figure of President Milei, and we, on that front, as well as our wishes when we represent Argentina abroad, that Argentina be successful, and it is important to have an open dialogue and understanding domestic, also that we Argentinians, as we heard in the foregoing panel, brought a new concept into the whole system, 1.7, a great amount of dollars for remonetization, as we have seen in pesos from the beginning of this year, an economy that is excited, is very excited because it will operate under reduced inflation. For us, this conference has been extraordinary for multiple reasons. Protagonists, because we thank our academics and also officials who have shared their extraordinary experiences, teaching us with their own perspectives. Up until today, over the last years, besides the exchange rate controls, there was an intellectual cepo or control. And part of the purpose of this conference was to have our minds open and share views and opinions. It was also extraordinary because we have had high levels of registrations, an extraordinary number of students, professionals, academics, experts in finance and economics wishing to participate in our discussions. Very excited indeed. We received more registrations than those expected, and President Milei is also excited to participate in our discussions, and we have a privilege because we're welcoming him this afternoon, and he is who is trying to show us the better path to improve. So Argentina is now being placed in a wonderful place that has been rebaptized as Palacio Libertad, Liberty Palace, freedom. And this is connected with the idea of liberty in general and freedom, economic freedom, possibility to cooperate. And the topic here that is evident for some people, a mysterious relationship between fiscal deficit, monetary policy, and inflation. A very interesting topic because this is one of those disciplines that make us suffer. We think that we know the theory, but when we want to put it in practice and we see the outcomes, in the past we have failed. And so we make the motto of developed countries, neighboring countries that were success cases, and also from from us. And I think that the main change comes from the society side. And in order to close my remarks, we have a wonderful staff with which we work at the central bank, making decisions, analyzing the current status of Argentina, thinking about communication, understanding these problems, and focusing some concepts that will be very useful, not only to understand where we are and where we are heading for, but also to understand magnitude, size of figures, what we call as economists trade-offs that are of the essence for policy decisions. And this presentation that has been, of course, published by the BCRA staff is very interesting indeed. There are 4 bullet points here. It's what we call a memorable moment, 1981, where a paper was published, a little bit of uncomfortable monetary arithmetic, which was a way of showing the problem of fiscal dominance of monetary policy. A paper by Sargent and Wallace from Minneapolis. Juan Pablo Nipolini, he also works there. Neil Kashkari, of course, as governor of the Minneapolis Fed. They are wholly aligned with this paper, and this is a wonderful space for reflection, a starting point to deal with these insights. Chapter number 2, which is bullet point 2, I'd like to share with you the so-called the century of setbacks. This is too much sticky monetary arithmetic. These are chronic deficits, and all these data, stylized data, show the relationship between fiscal deficit, monetary policy, and inflation. Why? Because when President Milei told us that this is the story of the 20th century, 1900s, 1991, he, of course, spoke about this relationship. We, within the BCRA, have experts within the central bank that have not only analyzed this concept, but showed such concept translated into figures, because we were, of course, experiencing a downward trend in our economy. Number 3, we had a period of recidivism, 2 decades, most recent indeed, and we had much unsufferable monetary arithmetic, because we, of course, took the problem to the limits, and we broke the limits of patience. And we, within the BCRA, found out that the way of explaining this phenomenon was by looking at the balance sheet of the central bank, assets and liabilities, as a measure for the degree of fiscal dominance in Argentina. Central bankers from developed countries say we have a dilemma because if we have more fiscal expansion, we have a more adjusted and calibrated interest rate. We have a lot of demands to raise the rate because of inflation. This is a cyclical management of monetary policy in Argentina. But the phenomenon in Argentina was much worse, because it was a deterioration and impairment of the assets and liabilities framework to curb inflation. And the ratio of assets liabilities in the balance sheet shows not only flows which are expressed by fiscal deficit, but also in the field of stocks. And to find a solution to the stock problems, you know, is a big issue. And we have have made great progress in managing. And last but not least, for a year of recovery, much healthy monetary arithmetic. We have a stabilization program in place directed to remove fiscal dominance as well as quasi-fiscal dominance. We have talked extensively about this one, and also banking dominance. We, when joined the central bank, was not controlling the system liquidity. Banks had the option to increase or not to increase liquidity in the economy. So this kind of dominance required very creative solutions. And this is just to pay tribute to the introduction of those who have developed this topic, some unpleasant monetary arithmetic in closed as well as open economies. So let's think about open economies. It is not only the monetary mission, which is excessive over demand that the government imposes on the central bank to be validated, and especially in the cases of Argentina, when we don't pay attention to public sector credit, the central bank starts issuing a lot of money and delivers reserves up until the reserves are wholly depleted to find a balance with the foreign sector. So instead of in a dollar restructuring, as many theories put it, there is a predictable process where emerging markets in countries like Argentina, fiscal dominance is even more harmful because it not only creates internal inflationary imbalances, but exchange rate balances that, of course, feed these inflationary expectations. Let's share our economic history. All these data exist, they are available and validate this position. Not only the ideas of President Milei and our ideas. President Milei, during the presidential campaign, explained to our people that these are not general figures. These are evidence-based figures provided by BCRA experts. Here you have the reference material where you see the gray area, fiscal deficits and inflation. And there you can see a ratio that is growing and increasing after Bretton Woods agreeing. And this is not a political narrative. This is a clear-cut problem defined by us. We are, in Argentina, we have been going back to very negative practices in this field, but no one paid attention to history, to Argentinian history. And what happened with the central bank against this backdrop? Negative rates for a very long time, which were unconscionable, exorbitant, the endogenous period in the 1990s. And of course, the response to all this scenario was insufficient, taking into account the metrics, negative rates. This does not only mean that savings is losing vis-à-vis inflation, but the private sector, of course, decides to take savings out of Argentina, and they take savings abroad. If the economy grows and we preserve savings at the real interest rates that offset, and in this case, remunerate the saver, we are going to make this phenomenon disappear. Today, the executive bankers that we have seen here told us that there are millions of dollars out there that have accumulated in the course of time, but have gone back to dollar deposits right now, remonetization. But of course, monetary policy should be independent of fiscal policy, and fiscal policy through the executive branch and Congress as well, to decide that it is worthwhile to bring back domestic savings again, reduce inflation, and leave our monetary policy do what is done in other countries. So here we have the inflationary tax, and I leave you to, of course, review all these presentations. We will post it to the BCRA website. And as you know, this is not only a tax. Inflation is not only a tax, but it's a kind of fraud or embezzlement. Therefore, if you see greater aggregates as M3 by the end of 2023, 80% of GDP, this tax has not been passed by Congress. This is pure, mere embezzlement.
It is also true that Argentina has a balance of payment crisis, and sometimes the fiscal part precedes, agrees, and sometimes comes after, or matches. In open economies, I believe it's been so necessary to include external resources that are transferred in a total amount of what the central bank loans the Treasury, to understand the issue of fiscal dominance. When the country has long litigations and doesn't look for resolving a debt problem, it loses access to markets, and in that loss, the reserve stock, which is finite, it's not infinite, it's finite, it is used for payments until there's no more left. And so that extraction of resources from the central bank, which is in the asset side, we will see in that presentation. You could see here what we could call maybe emptying or embezzlement. I think we have 2 decades of recurrence, and as Santiago Bausili said in the opening, if we account for this, it's more than 60% of the GDP. From the exit of convertibility, the central bank has transferred to the tax authorities. They're non-legislated taxes, and essentially, basically, we are seeing in this trend something which we haven't seen when we had fiscal surplus, but the intuition of being under capital control systems enables us to understand that there was a very clear choice of isolation from the world, where the central bank would be, during a political period, enough to fund the project. But there was no long-term planning, because basically there was no strategy to come back to the market. Now, the end stage of fiscal dominance is the concept I wish remains in the mindset. We were not able to reach the end, as I said, of a process which is easy to reverse. How is this seen as inflationary acceleration, the graph to the left? Because you see that the tax base is reduced. We were in 2.5% of the GDP. That's the rejection of the peso currency. To a certain extent, it is a calling of attention, because we were concerned at the beginning of the administration, but we believe that mid-year we are more optimistic. Remonetization is important. Some ill-interpret growth of monetary base. Our experience has seen that there's more on the supply side and not so much on the demand side. But when we see the trajectory of prices, a lower inflation, and closing, let's say, all the taps of monetary issuance, this is a healthy remonetization process where the private sector demands, at the right pace, liquid resources to remonetize the system. Historically, we are 8% of the GDP, 2.5%. Clearly, there wasn't much left for a collapse, not a nominal collapse of the economy, but real social and political collapse. And there are no precedents, I believe, comparable to the recomposition of interest-bearing liabilities together with assets of a central bank towards the end of 2023. When we speak about hyperinflationary risk, we don't say it very lightly. So when we talk about the interest-bearing liabilities based on the monetary base, are in excess of hyperinflation, a specific hyperinflation that we went through in '89. So being able to dodge the almost certainty or likelihood of hyperinflation, at least in these metrics, I believe it's something that should accompany us to build patience and knowledge that what we've just avoided is not easy to be avoided, and to recover credibility is so important when you're at the edge. Towards the right, the graph shows not just in liabilities, in assets. Towards the right, what you could see is like the scissors and in the interest-bearing liabilities is in the darker line and assets is the gray line. So this confirms that with the exception of 1989, during the 80s, we did not see an experience in relation to the liabilities. There were so many assets to defend the currency. So the inflationary policy, we couldn't escape it. You can create a lot of liabilities, but if you have a lot of reserves, then you can absorb them subsequently. Here, we did not have that advantage when we took office. And towards the end of 2023, regarding the monetary overhand and the exchange rate underhang, here you could see the ratio between two lines that are divergent. As I said earlier, this marked an implicit exchange rate, which was way beyond any prognosis, because of the exchange rate that would balance out the excess of pesos with dollar missing dollars. But that metric is concerning because it supposes that after the exchange rate cleans up the imbalance, we go on with our lives, and we know that's not so. This takes away any nominal anchor, and we would have probably had problems in the real economy, serious problems. And summing up, how do we exit all this? And I believe that this helps us think from the economic team how we think about problems and the capacity we can show for those that are still to be resolved. Under the guidance and the principles of zero deficit, Minister Caputo from overnight lowered the financing that had accumulated over 50 million pesos last year through different ways of fiscal dominance. This funding of the central bank was lowered to zero, and this was sustained all year. On the side of the central bank, the management was geared towards lowering interest rates because annualized interest rates, if you forecasted them, they created money with multiples. So the interest rates did not cool demand, they created greater excess in the future. Everything seems very logical with great rationale. But we had to appeal to creativity. It wasn't just monetary policy or fiscal policy and exchange rate policy. We had to also think about finances because there were agreements, and the idea here was not to break them. We had to design new contracts to absorb pesos. That was the BOPREAL, the peso swap. There was a need to repurchase agreements and to halt peso issuance, the puts and bids, and to the bids and puts, right? And to dominate that, which was really an aggravated fiscal dominance. This was achieved, and the process is one. You can't achieve it overnight. But I do believe that not only does it complement it, but it reinforces what we do in the macroeconomics. A crisis has a macroeconomics dimension as well as a financial dimension and a sequence in that time. And when I say this, there's an integrated response like the one we put to the service of stabilization, and this led to what we see in this graph, in this transparency, to focus on in the domestic market. What are the results of this? I'd like to refer specifically to the sequence, because there was a phase one, fiscal, secondary, monetary, and the exchange part of it is third. The exchange rate, those who place more importance to exchange rate, they believe that it accelerates solutions. We had negative rates close to 50% when we took office, and this was a result of the fact that those who had savings in pesos and couldn't buy dollars wanted to purchase indexed securities to protect against inflation. Now, during this period, we moved forward those rates through the lowering inflation and increasing credibility, confirming deficit zero reached normal levels. Instead of just pressing a button and opening up the interest rates, we tried to look for a balance, maybe with increasing some taxes because of the uncertainty between January and March. How do you place a price to the deposits in pesos, or even a security in pesos, without knowing if the deficit was zero? Those who wanted to go to the previous model, confirming what was not desirable but absolutely necessary to avoid hyperinflation and social crisis. Thanks to the patience and understanding that the cepo was not something desirable, but something that needed some time, the engineering of the Finance Secretariat and the soundness of the Finance Secretariat, as I said, and strong work by the central bank to change regulations and to take minimum and maximum rates, regulations that created distortions. We started to really have a domestic market without any restrictions. And so this helps, I believe, in establishing the foundations towards a freer exchange rate with an operational system, because if there are capital flights, and if we don't reorganize and rearrange the system and have a monetary equilibrium, it's very hard to know that if you open the cepo, you will automatically have, therefore, an exchange rate equilibrium. So we talk about a currency and interest rates. We've achieved this moving forward. The economy is more nominalized. At the beginning, that we were afraid of a Rodrigazo or excessive indexation. With credibility and without doing any juggling, magical juggling, we were able to nominalize the economy because Argentines saw a path where inflation was lowered, convalidating lower rates, not only nominally speaking, but also over time, a preference for nominal rates because they wanted to bet on disinflation and it was more appealing. So we changed the debt composition. The central bank, as a result, was able to clean up the balance sheet, reducing liabilities or assets that were inflated because they were government loans without market value, like the one that was in the books. What we did in the central bank was to hold on to the same rules and to value things according to their real value and doing away with the optical illusion of prior years. To do so, we had to recover liquid assets. This was done. These graphs are witness that with great management by the central bank that escapes monetary policy issues. But they are related to the recomposition that ends up with tools for a new scheme. You cannot go through a new scheme with your hands and feet tied. You have to loosen them, acquire those tools, and compose that balance sheet. The third result is the most evident and searched for. Inflation has really gone down strongly. Interest rates, in turn, have converged regarding monetary policies. Their mechanisms to transmission mechanisms of the central bank willingness that reach the market and have an impact. Without transmission mechanisms, the central bank interest rates are just a reference, a benchmark, but does not change the macroeconomic equilibrium. So we need time and give time so that these things can enable us to be arranged domestically, financially, economically, to later open up to the world successfully and not just randomly. And this is the end of this part, but I still have a few minutes left. And I think that one of the ideas we had with Santiago was to sum up and very quickly some notions of the panels that participated in the conference. The videos of all panels will be available in the central bank's webpage. You will be able to review them. There's a lot of material. Sometimes you can see them or not. It's worth seeing them. All panels were extraordinary from our standpoint. And I would like to think a little bit what we mean when we talk about fiscal deficits, monetary policy, and inflation. Very simply said, many times we resort to economic jargon. We talk about fiscal dominance, but it is a very practical and clear and common sense issue. It's the main problem in Argentina. And understand it technically speaking, disseminating it and giving it political value, preserving in upcoming years the equilibrium achieved from that relationship will enable us to exit the crisis and to do away with inflation. Yesterday we started with central bankers panel, Neil Kashkari and Fernandez emphasized what we saw as a key issue, the importance of the relationship of this central bank with the Treasury. In normal times with a relationship where there is independence of the central bank, there was a clear recognition that in crisis times, there's a coordination effect to be respected. The independence of the central bank is not just an absolute asset, it's relative according to the circumstances, and the coordination we have today enables us to think that in the future, independence will allow us to preserve inflation standards, but to avoid hyperinflation required coordination. They also mentioned in their panel different situations, reinforcing over time a goal which is to keep inflation low. A very appropriate conclusion, according to the announcements of the Nobel Prize in Economics this week, because it arranges issues for prosperity. When we talk about institutions, what drew my attention from the panel is that the given mandates and the responsibilities in U.S. and Europe promote the defense of monetary dominance in terms of fiscal policy and not the other way around. There could be conflicting times, but institutions create responsibilities, and vis-a-vis the conflict, the policymakers, both fiscal and monetary policymakers, face a different equation. And the main goal here is to keep inflation low.
It was also clear that certain other economic problems such as financing, budget, competitiveness in the economy are channeled by taking care of access to the capital market and gaining consensus, political ones, to make macroeconomic reforms, and not only make use of balance sheet tools such as interest rates by lowering them excessively, subsidizing them, or working along the lines of the rate of exchange to devalue our currency, on a repeated basis, because it's very difficult to compete and we don't want to do our microeconomic homework. And this is the reason why fiscal and monetary policy will be stable, predictable. Each task that we have to do in the future will be based on using the right tool, and we are not going to resort to the central bank to solve all the problems. The second panel session, Ricardo Arraso, Rafael Di Tella, and Gustavo Gaglianero, the stabilization plan defining the restriction on a bimonetary regime. We have to internalize all these in order to give an appropriate response to the prices options that are narrow and the trade-offs because of the imbalances, flows, and stocks. And finally, a remark on the metrics that give us a roadmap to understand if this chosen exit has a similar path to countries that are success cases. The discussion in that panel was open to consider alternative sequences in fiscal monetary policies that may be appropriate to ensure stabilization in light of past experiences and the space or conditions that may be available for greater or smaller velocity of implementation. Anyway, we made mention the adjustment of fiscal policy, a valuable element, and this is the only tool to pursue monetary and fiscal strategies, low inflation that would be appropriate. And there is a sentence that inflation is not only a price hike or the loss of value of money, inflation is embezzlement. The panel on quasi-fiscal dominance was essentially anchored in concrete dilemmas that Argentina is facing today. The academia showed us an intellectually vibrant path in order to understand macroeconomics. Ivan Werning gave us a master class on the contribution of economic intuition, mathematical rigorousness, and the ability to tackle with the most relevant problems in the most timely fashion, in what we call in the academia initial conditions, in a very elegant way, and we call it the received inheritance. Ivan mentioned the data about the complexity of exchange controls and the lack of access to the bond market to show in a very simple fashion, because the monetary policy option is the third optimal, which is not the most appropriate one. Even the fiscal policy was not the protagonist of this exercise. We coincide with the research work in the central bank. If we applied fiscal adjustment, we had leeway to loosen monetary policy and reduce inflation. In the world of economic policy, the classical formula, tight fiscal, loose money, is similar to the Coca-Cola formula, even though it was contested by most observers. Its effectiveness in the course of history raises no doubts, indeed, but these doubts were absolutely uninformed concerning the lack of consistency of our economic problem. And, of course, we have data, 3% inflation in September, that, of course, are showing us that we are on the right path, and under extraordinary circumstances, extraordinary measures can give us conventional results. The panel on stabilization made us see how the economy looks like more art than science, and it's not for cardiac patients. And the same protagonists mentioned this. Gustavo Franco, Leonardo Lederman reviewed the success of Brazil and Israel with their stabilization plans. In hindsight, historically speaking, we may think that this was automatic and linear, but the narrative that they shared with us concerning their experiences say that a political decision with imperfect information, risk management in the industry, in the finance industry, are questions that we call path-dependent in economics, and we must have a portfolio of options within this context of tight fiscal policy and loose monetary policy. They remind us that there are common elements: preservation in time of fiscal anchor, for any country to reduce inflation from certain levels, living together with a real appreciation of the exchange rate, and the need for a flexible monetary policy willing to act vis-à-vis the changing scenario, and that it cannot be permanently at the service of fiscal policy. On exchange controls, there were benefits if they are flexible, but the figures show that defining a new exchange rate regime requires more than one step. It is a succession of phases leading up to convergence. I was amazed at the X path in the graphs showing the trajectory of the fiscal policy. There was a caveat there. Each stabilization plan must respect the real world in each country. The time is different, but even success phases that may seem to be linear as plans, of course, require time to reach the final success. And there was a panel. There is nothing more popular than reducing inflation. The panel on fiscal dominance allowed us to refresh our memory on the saga on fiscal dominance 2001-2016 with the fact that this is real. Gregory Makov reminds us of the economic cost when you are not renegotiating debt adequately, lack of access to financing, incomplete restructuring, or a restructuring without an economic plan supporting it, as it happened in 2010, and it has consequences. Both are negative. It increases dependence of the government on the central bank, and it makes the fiscal dominance even sharper, leading up to inflationary hikes. Second, according to our experience, imposing exchange controls that should be removed and eliminated gradually, even though Greg Brooks speaks about Argentina and debt 2016, his conclusion is evident. Adjusting stocks, debt during past crises have not allowed Argentina to stabilize its economy. Finally, his work shows us that the effort to, of course, correct fiscal deficits and deficit flows is promising if we want to resolve instability. We also had an international vision from investors. This panel gave us understanding on how global investors make decisions vis-à-vis international scenario, and how they look Argentina, and how they try to understand what's going on here, and how enthusiastic and excited they are about our process. Claudio Irigoyen, Ramos Stock, and Tom Smith, in perfect Spanish, the three of them told us that investment flows in emerging markets improved moderately, but fiscal deficits of developed countries are being monitored. If fiscal dominance is a concern in those economies, and not only in Argentina, they acknowledge that the long interest rates are not going to follow inflation relaxation imposed by the Federal Reserve, and this implies a risk crowding out of the private sector. In our case, emerging flows in Argentina, we know that the stabilization plan lived up beyond expectations, and the fiscal anchor is subject to policies, and recovering fiscal independence means that the policy will have a commitment vis-à-vis zero deficit. The other panel on stability was very relevant to us all, particularly because we are Argentinians, and Adrián and Licandro helped us understand how difficult it is to stabilize an economy that is highly dollarized. This is another restriction, and the key thing here is that dollarization is not an economic plan. It happens at the level of society, and monetary systems should incorporate it rather than combating it, giving the user an option. This is what we call currency competition, and this implies that each currency must create its own place case, it must compete with other currencies, interest rates, and having a perspective for currencies for user, not for the government, which creates the demand for such currency in such economy. But they started with dollarization, making space to the peso, even though Peru may be taken as a benchmark case. We started by pointing out that the previous administration wanted to remove dollar artificially and promote the peso. But our challenge is exactly on the opposite side. We have to open up space for the dollar, and repatriation of capital is part of remonetization. And this has not been under the radar of investors. When investors are worried about the fact that the central bank is not buying $1 billion in 1 month, you should see that the balance sheet of Argentina, the balance sheet of the central bank, not of Argentina, is the important thing. No matter whether this purchase is 1 billion or 2 billion, is of the essence. We have 13 billion, more than $13 billion that entered the financial system through this repatriation of capital plan. And we don't know how much it will remain here, but here you should see that we have more dollar-denominated deposits in dollar than reserves at the central bank. In the long run, this will be migrating towards the central bank, gross and net reserves, SUDREM, and without any exchange rate manipulation, without any debt transaction, or any kind of relief required from international bodies. Before, no one wanted to give a figure to this scenario, but now the figure, in spite of capital controls, many people have, of course, injected new dollars into the system once again, and these are assets, $400 billion, liquid assets in Argentina, $200 billion. So there's much space for us to grow. Peru and Uruguay told us that it is much more complex to engage in monetary policies in bi-monetarist countries. And the central bank is working along the lines of a payment system, Uruguayan-style system, so as to expand, of course, the demand for money and, of course, the possibility of making transactions in dollars, which makes the peso also very attractive as an instrument that is going to compete with the dollar in the transactional dimension. Juan Pablo Nicolini in the next panel session, he was very optimistic indeed, and both panels were optimistic. He combined the stories of these models, the fiscal deficit, monetary policy, and inflation. Not only creates instability, but it has non-neutral effects. It affects the real economy. Inflation has negative real costs. And optimism means that if we sustain zero deficit in the course of time, models show that we have an opportunity to multiply income, per capita income. And that optimistic panel was closed, followed by another panel with private sector bankers and payment system executive directors for remonetization purposes, and that microeconomic view is a very good complement for the macroeconomic side. And we have challenges against this scenario. Fabian, Jorge, and Osvaldo told us about the topic crowding in, because figures here are significant, and the cost-benefit analysis of fiscal adjustment has a counterpart, an expansion of the private sector. And this is something that is happening right now. We don't have to wait for next year, and figures are really astounding. So, with all this, I will be wrapping up everything I have just said. This Money and Banking Conference has been extraordinary, and now there is a special guest that is going to share his vision for Argentina. And as I am the ham of this sandwich, I, of course, close my remarks. Thank you.